Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boysnow with Kevin Casey, and today we are joined by Vince Robb. Good morning, Vince.
Good
How are
morning.
you?
Good. Thanks for having me.
We are very happy to have you with us today. It is very unusual that I do a proper introduction for someone, but I'm going to do it today. So brace yourselves, people, and don't get used to it. So there's a reason that Vince is here today. It is because, oh no, did my video just go off again?
Yes.
Oh, great. Okay, well, it is what it is. So, geez, Louise. Sorry, I was having technical difficulties earlier, and here we are again. Okay, so we're just gonna roll with it. So Vince was at an event, a camp event, as a matter of fact, that I attended not a few weeks ago. And he is running for tax assessor in Contra Costa County, which is in California. And I was really struck by how much he knew, what his messaging was, how fair and balanced he was. And then I was really upset to hear that he isn't being endorsed by everyone because he doesn't have the correct letter behind his name. And I just think that tax assessors should not be partisan. It is so important, and not just here, but across the country. So Vince is the assistant county assessor for Contra Costa County. He's been there for what, 20 years, Vince?
Yep.
Vince, are you an appraiser by trade?
I am. Yes. 20 years.
Oh my God. So you've actually gone to houses and actually done valuations of them?
Yeah, that's how I started. Right at the entry level, I did residential property and then moved up, did commercial property and industrial, and then got into the supervisory side of things and started reviewing all the appraisals.
My
Now I'm
God,
a-
what a novel idea to have somebody at the tax assessor who, I don't know, knows how to read an appraisal, do an appraisal, understands valuations. It's great, right?
yeah, I don't know how
Okay.
you would do it without knowing anything about real estate. So
Well, we've
Sometimes I
also
hire
learned
real estate
recent.
agents.
What'd you say, Kevin?
Sometimes I hire real estate agents. Am I correct?
say that again.
Sometimes the counties hire real estate agents because I've known a couple that have done that.
On the right of way side, but we state of California requires a appraiser license, a state of
Oh,
California appraiser license. So we only hire appraisers or we train them.
okay.
Yeah.
So who are these liars who are telling you they were hired by the assessor's office, Kevin?
Uh, no, they were real estate
It's
agents.
okay. I was just kidding. Just forget it.
I'm just thinking. So it's like, well, I wonder how he did that. But he might have gotten his appraiser's license and then done it that route.
We have recently figured out that the candidates for state insurance commissioner, I don't think any of them have an insurance license currently. They would have to become licensed like within a certain amount of time of becoming the insurance commissioner for the state. And the more I'm finding out about this, and it's all coming together right in my little brain because as we have visited legislators across the country over the last number of years, Kevin and I, maybe you too, Vince, but anyway, it is always astonishing what they do or do not know, right? And I'm just assessor needs to understand, I don't know, assessing properties. So you've got 20 years with the assessor's office, you have a background in appraisals, and you are currently running the assessor's office.
Yeah, I'm the number two, so I pretty much run all the day-to-day operations. And then get the current county assessor whatever he needs to do his side of things.
Right.
So yeah,
And you're
115 people in the office, and they're all kind of under the umbrella underneath me.
how many again?
About 115.
Ah, my goodness.
Oh,
Okay. And you guys were audited, had to have a survey by the State Board of Equalization. What was your accuracy rating, Vince?
Correct. Every 5 years, and our last one last year came in 99.78% accurate on our assessments.
I don't know, Kevin. How do you feel about that as far as an assessor's office goes?
I think they messed up my taxes, but that's not.
Okay, he's in a
I'm not
different
their town.
county. He's in a different county. All right. So if we have time, Vince, we're going to circle back to your red carpet security
Okay.
gig that you've got going too.
Yeah.
In the meantime, I just want to mention the usuals, which is what's happening this week as far as reports that are coming up that might impact the economy. And actually, it's a pretty light week when it comes to economic news that's being reported. We have mortgage apps tomorrow, 20-year auction. I mean, that can move the markets if it doesn't go well. Jobless claims on Thursday, but as it has been for the past, I don't know, 6 weeks or so, the war, the war, the war, the war. Last Friday, we were all excited because the Strait of Hormuz was supposedly open, and we were all going to sing hands and sing Kumbaya and live happily ever after. And then that all went to AT double toothpicks about Saturday, I think. So at this point, whoever your favorite deity is, say a prayer for the peace talks that should be happening right now in not Istanbul, in where are they? Karachi, I think, in Pakistan. So anyway, that is ongoing, and it's not over till it's over, is how it's
Oh,
feeling.
we will
Thoughts,
see.
Kevin?
Yeah, no, we'll see what happens with there. I do like the meme I sent you of Trump pushing the button on his desk and keep getting the Coca-Colas there.
Okay, it wasn't a meme. That was a video. I think
That was a video.
it had to be a like the first admit like his first term. Wasn't it from
No,
then?
no, it was a second because I don't think he had the. I was trying about that, but did he have the Coca-Cola button in the first term also?
Okay, so it was a oh my God, what is wrong with me? Who is it? Family Guy?
Yeah,
Is
Family
that Family Guy? It was a Family Guy video, and basically every time Trump and Peter got into a humongous fight, and they're like rolling around all over I mean, like up in the sky, down to earth, all over creation, through Congress, the whole bit. But they landed in the Oval Office on the president's desk, and there was a button every time someone rolled over on the button. It some waiter showed up with a drink on a tray. It was funny. Okay, moving right along. I
Guy. We
swear to
digress.
God, we're gonna get in
Back
so
to
much trouble today. Sorry, Vince.
No,
We're going to try and behave. It's not easy. And just for those of you who just joined, something's up with my video. I don't know what the hell it is. So you just get my voice. Sorry about that. Well, I don't know if it helps
if
to have
you
my
if you
picture, but
follow, it happened to me a few weeks back, and I ended up just running to Best Buy and grabbing a new camera. This simple solution.
this is a new camera. I think it's
Oh, fun.
anyway, who knows?
Oh man. Sorry.
Okay. Yeah. I've got a wonky setup right now. I got to fix it. Okay. We had ADP weekly employment come in for the week ending April 4th. It showed 55,000 jobs per week being added. That is a decent jobs number.
That is a decent number.
I mean, if that persists, we're over 200,000 jobs for the month. And then
Yeah.
that last BLS number at 192,000 jobs doesn't look as stupid, does it? Or 78, maybe it was 178,000. So that'll be interesting to figure out. And by the way, I've got Ron Hitrick, our little labor uh, economist, coming on, employment, yeah, labor economist coming next week. So he'll be able to speak to some of the employment information we've got coming at us. But I mean, if these job numbers are starting, if the hiring is really picking up like that, that's going to be interesting to watch. I mean, it's good for the people who need jobs, obviously. It could be something for us to be aware of in the as far as the overall economy goes. Yeah.
Yeah, no, I'm honestly thinking it's today a good day to lock because tomorrow could be a really bad day to lock.
Okay. I don't know why you say these things. I wish you could see my face right now. The incredulous, what the hell are you doing? Look on my face.
Well, if all hell breaks loose in Iran, that's not going to be good for stock for rates, and
Okay, that's been the story for the last 6 weeks. What's new tomorrow?
because the kumbaya we had on Friday, rates got nicely lower, and I was hoping that trend would continue.
Well,
So
you missed it this morning, baby, because we're down what, 15, 14 or 15 basis points last time I looked. So I don't know. It might be too late. Who knows?
there's a deadline tomorrow. They're right on the ceasefire. Isn't there a deadline tomorrow?
God, there's always some freaking deadline.
yeah.
Um, or it was
Well,
expiring or it's going into effect. I don't know. Oh,
Hey, you're
oh,
back.
you're back.
oh
Look
my
at that.
God, I'll have to behave. Thank God I kept my clothes on.
Don't move. Just don't
Don't
move.
move. Do not move. Good grief. I
Don't
don't know
even
what
breathe.
that
Don't
is.
even breathe. Just stay there.
Okay.
Hey,
Just
back to that jobs report. The thing that the question I always have with that isn't part of that is are people taking jobs, that are now lesser pay than the one they had prior, or is it more or equal? I always question like that of, people need to take a job, but if they're taking it for a lot less money,
Is
yeah.
that really helping
well,
the job? Yeah.
Vince, add us to your calendar. We'll be talking to the labor economist who used to run the division at Bureau of Labor Statistics that produces the jobs report.
Hmm.
So we met him a few months ago. I don't know when exactly. And he's really interesting. It's really great to get that insight and understand a little better about why there's such disparity between the BLS jobs number and the QCEW jobs number, which are just vastly different. We got a good explanation on that. Might not like it, but at least we understood it. And so anyway, very, very, very interesting. So meanwhile, retail sales came in higher than expected. I mean, gas prices were up 15.5% during this period of time in March. So that may be skewing things because all the other inflation numbers are, the other parts of inflation seem to be under control. And so again, we're just kind of holding our breath and saying a prayer. Meanwhile, Cotality's rent index came out for the month of February. These are new single family rents, and they were only up 1.1%. That is the slowest since 2010, I believe. That'll be good for our future inflation numbers. Because I don't know if you remember when rents were going up 14%. It was, yeah, crazy, crazy. We also have the Fed chair who is not confirmed yet. And his confirmation is a little bit up in the air. So we'll see what happens with that. The transition is supposed to be happening May 15th. He's supposed to be overseeing the meeting in June. But, at this point, they're playing, I'll vote for him if you do this kind of thing. And we'll see what happens. But I did read an article. That man has some money, like over $100 million. He is definitely not going to be bought off because he doesn't need to be, right?
Yeah.
I don't know. I don't know why my brain thinks that. Okay, or thinks that won't happen or something. Okay. Fed Facebook came out, 12 districts. The Fed members are all asking their friends in their districts, so what do you think's happening? And basically just slight to moderate growth, so nothing crazy with inflation. So other than higher energy prices, inflation is doing all right. But
Hey,
traffic
speaking
at the
of
food
which,
banks is higher. What?
Audrey, everyone wants to know, what are you paying for gas these days on Walnut Creek?
$6 million a gallon. I think I paid six. I saw 6.57 a gallon last week. When I got gas, I think I paid 6.17 a gallon, 6.18, something like that. Uh, Meanwhile, across the country, they're whining that they're hitting $4, and I'm like, shut up, you're lucky.
The big discrepancy is the diesel is way more than the regular gas.
Yes,
Yeah, that's
And
yes.
that's where the rest of the country screams, like there's a lot of big diesel trucks and stuff in a lot of states.
Well, and that's got to trickle down to the prices that we're paying for the goods that are being transported, via truck, right?
Yeah.
So yeah, I don't understand enough about gas, oil, all that to know much of anything, but I do know that is crazy.
also airline flights are much more expensive now because I think they're worried about the
Jet fuel.
airline fuel.
Where did I just heard or read, I don't know which, sorry guys, don't ask me for a source, that Europe had like 6 weeks left of jet fuel. And I'm like, so does that mean that if you fly to Europe, you're good, but you may not get home? Or how does that work exactly? We have 6 weeks left. So
I saw
any
that headline
insight into
too.
that would be appreciated. What?
I saw
I
that headline too. Yeah. I was like, oh.
Isn't that crazy? Okay, so Greg is saying 8.78 per gallon for diesel in Riverside. So
wow.
holy smoly.
Wow.
I
Yeah.
wonder what Beverly Hills is because that one's always the most expensive
Yeah.
one. Frankly.
Surcharges on gas. Wow.
So Rick just said that they're seeing, hang on a second. I can't see it. Okay, Rick said a few of my restaurant operating friends are
That
seeing
is
fuel
Beverly Hills.
surcharges on their supply delivery starting last week. Holy guacamole. Oh, so Greg is now saying that is in Beverly Hills, but Riverside is not in Beverly Hills. Okay, I'm confused. But anyway, regardless, down south, bloody expensive too. Um, so Vince, how about this? How about we talk about tax assessor, property taxes? Let's dive into that a little bit, shall we?
Sure.
So let's just start at the very beginning. As if nobody on here knows how one might calculate a property tax. How does that work exactly?
So I know we have a national audience here too. So California is different than all of the other states. Out here in California, we have something called Prop 13, passed in 1978. And it basically regulates how much your property taxes can go up each year after you have acquired ownership of the property. So as soon as you acquire ownership of the property, your property gets reassessed and your tax base, your Prop 13 tax base gets set. Uh, Typically, that is if you bought your house on the open market, it is your reported purchase price. However, there are a lot of off market transactions, and also anytime somebody passes away or something like that, we have to reassess those properties because it is a change in ownership. Regardless, when we set your tax base, that becomes your Prop 13 tax base. Out here in California, that tax base cannot go up more than 2% per year annually unless you do some new construction of some sort on your property or the property changes ownership. So that is the law that some people call unfair. Others people like it. It ultimately everybody has Prop 13. It ultimately does benefit everybody in that when you go to purchase your property, you then know what your tax base is going to be for as long as you own that property. So you get some consistency there. And if you add on to your property or something, then it's going to go up. But you can plan for that. That's the big difference between California and other states. Is in other states, sometimes you'll hit, they can change it every couple of years, and you'll hit some big increases. I read an article this morning that in some states, property taxes are going up 9 to 15%. I I don't know what I'd do in those states taking on an unexpected increase like that.
Yep.
Whereas here, when you go in and you enter your mortgage and all that, and you look at what your monthly kind of costs are going to be for mortgage, taxes, insurance, the whole package. I know what it's going to be. Obviously, insurance now is a little different. I
Yep.
recently got dropped and then got a new company, and then they dropped me too. So I'm on the third one in 4 months. Um,
Wow.
yeah, driveway cracks, really. Yeah,
I haven't heard that one. How big were those cracks,
they've been here
Vince?
since I bought the house 20 years ago. They've been here the entire time. They're probably better than they were when I bought the house. And that's a whole nother thing right there. If companies don't want to insure in California, I thought we were worried about fire stuff, and I don't have any trees anywhere near my house. But
Yeah.
driveway
Yeah,
cracks and a little bit of
that's
dry
a
rot.
whole different thing. Okay, so let's go back to the property tax, the basis. So we have the base property tax that's typically what, around 1% here, right?
The state one
The
base
base.
is 1%, but
Right. But
everything's usually
then,
more like 1.25.
but then you have to look at your property tax bill because all those bond measures and parcel taxes and the Kevin has a monster. What I don't know what he's doing with the
Sewer
sewage
tax.
system in
That's
Pacifica, but it is
okay.
crazy.
Well, my sewer lines must be plated in gold because my sewer tax just by itself is $2,400 a year.
Wow.
Yeah.
Isn't that crazy? Either that or they've singled him out as an abuser of the system for God knows what reason, and they just charge him extra. And everyone else in Pacifica is paying something reasonable. Is that possible, Kevin?
Well, I don't know because my water bill's nowhere near my sewer tax bill, so I don't quite get it. But
You should inquire to make sure they haven't mislabeled your property, because like different if you have multi units or if you're like a restaurant or anything like that, they pay a whole lot higher sewer charges than like a single family. So call that the assessor's office does not do that. That's on the left side of the bill, and I don't know about in Pacifica, but hopefully the phone number for them is there. We required that in Contra Costa finally to put the phone numbers for those special districts so they stopped calling our office.
yeah,
That
that's a
was,
brilliant
it was a
idea.
good move 10 years ago.
What
That's
I've
great.
learned is that if I ever have a leak, um, I'll get a high spike in my water bill, right? And God help me if that leak happens in January or February, because they base my water usage on the January, February bills, because those are typically the when you're not watering your garden because
Oh,
that's
wow.
our rainy season, right? So I think a few years back I had a water leak at that point, and I didn't notice till I got my water bill, and then that will reflect into a sewer tax bill. I've come to learn that one, but then they make it such a challenge. You have to go through all these hoops to say, no, look, it was a water leak, not my usage. It wasn't going down the drain. It was leaking into the garden. Um, so it's
So
just,
again, in California, not every place has the same property tax. It's interesting. You have to, and in some cities, like, well, anyway, in some cities, the parcels can be very different too, depending on where they are and, which mosquito abatement area they're in, et cetera, et cetera. So you really do have to watch it. And I recently became very aware that different lenders look at property taxes differently. So they don't all they don't all go off the industry standard of 1.25% to calculate the property taxes for a new purchase. Some of them will do something else. So anyway, so it is very individual. You definitely have to pay attention. It's incredible if you look at someplace like Oakland's property tax bills, you'll be shaking your head. So anyway, so that's one thing. But so we have the base and then they have all the add-ons to it, right? But at least we know that those that our base can't go up more than 2% a year, right? That's the
correct.
cap from Prop 13. So we're hearing about that too across the country. And when we started having the enormous spikes in appreciation a few years ago, I started saying, what is going to happen in those states where they don't have Prop 13? What if you have somebody who is on a fixed income and they all of a sudden their value is much higher, but they don't have bigger income? What are they going to do? So I don't know what the answer is. If anyone knows, let us know how that's going. But I'm hearing that it's not
well,
easy out there right now.
I'm going to guess, and Vince, you can answer this question, but if someone's, let's say, over the age of 65 on a fixed income, is there programs for them in Alameda County where they can say, hey, can I defer or tax payments for if you're elderly? Are there any programs like
Um,
that?
so the counties don't, but the California Franchise Tax Board does. If you're over 62, there's not many programs out there, but there is some tax deferral programs. I think also if you're severely disabled, I think there's some stuff out there as well. Those are at the state level, not the county level. Um, but yeah, there is some stuff out there like a senior citizen property tax postponement like program, but I believe they're through the California Franchise Tax Board.
Okay. And does that like defer it till they pass away or what? How does it work?
They they start looking into the income and all that, and then they can. I think there's different levels of it. I have seen it where they defer it till they pass away, kind of like reverse mortgage style almost. But I've also seen it where they find like a different kind of payment plan to be able to still capture some of the property tax money.
Now,
Interesting.
the other thing that's unique to California is you don't sell defaulted tax liens. Am I correct? Like some states do.
The tax collector, so we're separate, right? There's the assessor's office, and then we do the valuations. We then send them to the auditor's office, who calculates taxes and issues refunds. Good spot for them. And then once the auditor calculates the taxes, they send it to the tax collector, who sends out the bill and collects the money. Um, so the tax collector kind of is in charge of that. They will, if you haven't paid your taxes in I believe 4 years, they start doing all that default process, and usually on the fifth year they will sell the properties. It doesn't happen very often though.
Yeah.
It
Uh,
may depend on the amount too. So, are you going to check into that, Kevin? You meet the age requirement.
yeah, yeah. Now I'm good. Um, but I know like states like Texas, they sell defaulted um, property tax. Am I
So
correct?
he's saying they do it here too. It just takes a while,
Yeah,
and it
Okay.
we try
probably
not to.
depends on the amount. Okay.
Also,
So,
you can actually buy a California default tax.
You can buy the property. Yeah, if the tax collector is selling it at auction, you can buy them.
Really? Wow.
Yeah, there's not many. I think we probably in Contra Costa 30 a year, maybe. The thing though is there's weird rules. I don't know them in and out, but like if you make like one payment in that 3 years, it like starts the clock again. Like there's there's different ways that they can reset the clock that takes a lot longer than to when they finally end up selling the thing.
Interesting.
okay. So let's talk about reassessment. So you own your property and you do a remodel. then how does that work exactly? Does the whole amount get reassessed? Is it part of it? Tell us how that, walk us through that, please.
So yes, this is the complicated area here is no, the short answer is no. Your whole property does not get reassessed. You still have your protected Prop 13 tax base. If any value is added on, it is just for what you added to the property. Okay. So if you add square footage to the property, yes, there is going to be additional value added onto your Prop 13 tax base. You do not get fully reassessed, it gets added on. The remodeling and whatnot is the gray area. The legal definition term that is used in the revenue taxation code is substantially equivalent to new. That's where the appraisers in our office have to determine what was, general maintenance and upkeep and whatnot, and basic like for like remodeling versus what was like added, you know. So, you remodel your kitchen and you just put in new cabinets, countertops, and fixtures and appliances. It looks exactly the same layout as it was before. We usually are not in Contra Costa anyway. I can't speak for every county. In Contra Costa, we usually aren't adding any value. We call that like for like replacement
Wow.
only. Now, legally, under the terms, we could, if you went from a Formica countertop to a granite countertop, legally value can be added for that. Um, that is where the assessor's office do have a little bit of discretion on like call them like code upgrades and whatnot, right? Like we don't really add on for code upgrades when you were required to do it, especially like if your house burned down and now you got to do all these code upgrades. We're not going to ding you for those because that's just bringing you up into compliance. So that's the gray area there. The easiest way is if you added something you didn't have before, you may want to expect that there may be some value added to your tax base.
Should we get an appraisal before we start the remodel and an appraisal after to just make sure we're covered? Would
No, that
you,
No,
was
would that do anything for you?
there's no need for that because again, you're going to add value with some of that basic maintenance and repair and upkeep
yeah.
cost, right? We're not going to add value for that. So if you did an appraisal before and appraisal after, it's going to include that value. But from an assessment standpoint, we're not going to add that. So that might actually be worse for you than what we may end up doing.
Alrighty then, we'll skip right over that
Yeah,
little
save your
idea.
money on that one. Appraisals
I,
aren't cheap.
I remember I my previous home. It was elevated rancher, so it was up top floor. The bottom floor was unfinished, and the previous owners had finished a downstairs area that wasn't part of the garage, but they did it without a permit, and they did not do it structurally correct.
Mm-hmm.
So I came in and I pulled a permit to add square footage down there, an extra 500 square feet. And but then baby number 3 or 2, I don't remember, came along, and the whole project got stopped because I was dealing with it. I was an owner builder, but I got a letter from the county saying we want to reassess you for the extra 500 square feet. And I replied back and I said, well, actually, I haven't. All I've done is demoed the unpermitted work. So in theory, I've actually decreased the value of my property because I've eliminated this work. And so they actually did not increase my taxes, which was nice. They didn't decrease them either, though. I was disappointed with that part, but they did not increase them. So it was interesting, like how they worked with me on it. It was quite well. That was San Mateo County.
Yeah, you probably could have argued a little bit to get a reduction there. They probably expected you to still do the project, but
And
if
in
you
the end,
bought
I did.
something, yeah, but if you bought something that was there and it was included in your purchase price, regardless if it was permitted or not, the assessor's office doesn't care whether it's permitted or not. We assess what is physically on the property, whether it's permitted or not. So if you kind of paid extra because you had that little area, you could have made an argument that when you demoed it and didn't go through with the project, that they probably should have removed a little bit of value.
Yeah. Well, in the end, I did. I put it back in again, so it came
So
out
then
okay in the end. So,
they got you then.
Well, I'm glad we could hash through what happened on your property you owned 25 years ago. That's good. Uh, so,
well, no, because I get it. I got the question the other day from someone who wants to do a similar thing, but he wants to make an ADU. And I'm like, well, making it an ADU, if you're just using the same square footage and all you're doing is changing a door in your place and making this section part of the ADU and this, that doesn't change the square footage at all. Am I correct? And therefore, it wouldn't change the property tax base necessarily.
It, probably not. I got to talk in hypotheticals here because I don't know it, but
Yeah, yeah.
probably not. Yeah, if it was kind of already there and you're just going to wall off one door and put a separate one in there, I don't know if they're going to add a kitchen or a kitchenette or something in there. But kind of again, if you're adding, then something's going to get added. But if you're just going to close off one wall so it's not access to the rest of the house and open a door on the other side so you can rent it out, probably nothing will get added for that.
Interesting.
So let's talk about ADUs for a minute. So as people are thinking this is the greatest thing since sliced bread, from an assessor standpoint, how do you guys look at ADUs and valuations before or after one is added? Can you walk us through that?
Yeah, ADUs are, like you said, that term. I mean, the range of what it qualifies an ADU is huge, right? It could be like a little one bedroom, one bath, like one bedroom suite that's like 200, 300 square feet, or it could be 1,000 square foot, almost like a second house
Yep.
on there, and they're all called ADUs. So, um, you have two things that play here in ADUs usually. Is one, it's hard to assess somebody more than what they paid a general contractor. If they got multiple bids on what it costs to build that, it's hard to assess somebody higher than what they paid for to build it, right? If it's long as it's done through a general contractor, you as owner builder, you're saving there. We have to assess things based on fair market value, as if anybody could have done what you did, right? So sometimes we come in higher than owner builder cost because you're saving on profit and overhead and all that you'd pay a general contractor. But on the ADU, if it's bid out and you're building that, it's hard to add any more than what you paid because that's what the next buyer could have. If that ADU isn't there when somebody buys that house, that's what they're going to pay to build an ADU, right? It's kind of the whole substitution effect in appraisal, right? Somebody's not going to pay more for something that they could just pay to build themselves. So it comes down to there's a market value of the ADUs. That's hard to decipher a lot of times because of the varying sizes of them and the varying rents. If you were to try to do an income approach, so typically when somebody adds them onto their property, we just do it based on a cost approach to value, and we're usually at or below what they pay to put that ADU in place.
I mean, these ADUs are costing anywhere between $200,000 and $2 million. I know of one, and so it is a major. I mean, like it could be anything, right? So you're just going to really go off of what did you pay for this? Is that what I'm hearing?
Typically, when if you already own the property and you're adding that on, we're typically going to look at costs, right? I mean, because as with any structure and whatever, the quality, we have to adjust for the quality there. So if you got the safe size one, like you said, and it could be 200,000, and maybe somebody else puts gold in there and it's 2 million. Doesn't necessarily mean we're going to pick up the 2 million, but because we'll have to look at resale there. But yeah, typically these are done they're assessed based on a cost approach. We could look at market if we have to, but the cost approach usually brings them in line. Because again, if somebody's not going to pay more for that property now that it has an ADU than they would have before when they could have bought the property and just paid somebody to build the ADU.
Right.
I have a question I get asked by clients all the time is that if I do work in my house and I don't pull a permit, I'm avoiding having my property taxes increase. But what you're saying is a lot of times pulling a permit doesn't automatically increase their property taxes. In a lot of cases, it doesn't change their property tax at all because all they're doing is making improvements or fixing things that don't change the value of the house. Am I correct?
You're correct. Yeah, you might save on permit fees and all that, but from an assessor standpoint, especially in California, our staff's driving around in neighborhoods and all that. So even if it's not permitted, you see a porta potty in the driveway, something's going on. But
So they're
um,
driving the neighborhoods looking for,
I
this
mean,
is in the course of going somewhere specific.
yeah, we're not out there searching for that,
Okay.
but we are out there because every permit that does get pulled, we get a copy of. So every permit from every jurisdiction in the county, we get a copy of, and we get a copy of the plans. So we go out there to take a quick look at the quality of the construction, as it can widely vary. And so we're driving around. We're also looking at houses that sold and the quality of them. And then also we go out and check the ones that don't sell on the open market. We got to go out there and take a look at the condition before we assess them so that we can assess them accurately and fairly compare them. So yeah, regardless if a permit's pulled or not, we can assess it, but just because they pulled a permit, I got to probably in our county, majority of the remodels, we probably don't add value or much value at all. Um,
Wow.
because, if you just do like a bathroom remodel and it's kind of the same layout, we're not usually typically going to add anything. And then maybe the next year you do the next bathroom, same thing. And the next year, maybe you do the kitchen. If you do it all at one time and you're like completely gutting the house, you fall into a different category. But we likely still aren't going to add on anywhere near what you're spending to do that total remodel.
Wow.
But general upkeep and general, piece by piece kind of stuff typically doesn't add any value. It doesn't add any assessed value to your property taxes.
Wow. And how often does an assessor go in a property? I don't hear much of that.
When I started 20 years ago, I felt like we went in a whole lot more. But people these days are a lot more, guarded. So they don't go in as often. We try to go in. It depends. When they're under construction, and they're wide open, a lot of times we do go on the property and take a look at the quality. Um, and sometimes the taxpayers just send us pictures or we'll reach out. It helps now that we get the plans for every property. When I started 20 years ago, we weren't getting all the plans. We were just starting, and now all the building departments supply the plans. That helps a lot because then we're just more verifying instead of like inventorying, because we can do
Wow.
it with plans.
So somebody asked the question, what if you were able to subdivide your property from 5 acres to 2.5 acres? Will the taxes go up?
No, if you own that whole 5 acres and you split that, we're just gonna split your current assessed value as long as you still own both of those after you split it, um, even before you sell it. Yeah, we'll just split that the assessed value between the two properties.
Super
So
simple.
let's talk about Prop 19, which was enacted in what, 2021?
Yeah,
And it
voted on in
and
2020. Yeah.
the part, I mean, we know that there were two parts of it. One part of it meant that we could take our property tax base with us once we had gotten past age, what, 55, I think, and that you could
Yeah.
take it from any county in California to any other county in California, and there wasn't a limit anymore on how many times you could do this. Does that sound right?
That is correct. Yes, you didn't used to be able
Okay,
to transfer across counties except for I think 7 or 8 counties in the state. Now you can go to
right.
take your base to any county, which is great.
Right. Okay, that was the good news. So the
Yeah.
not so great news was the rest of it, which is what we're going to talk about now. It's the parent-child transfers and how that changed, how that works, and also how on earth do we, is there some way to work with that law and still not have a reassessment if you were to take over your parents' property?
So yeah, that changed everything, right? That was the second part
Did.
that I don't think a lot of voters realized they voted on here in California was everybody they sold it really well and a lot of money was put behind of the wildfires, you can now move like to the next county and oh you can now move closer to your grandkids even if it's in
Different
a
county.
higher priced area, right? You used to only be able to transfer your tax base if you went down in value. Problem with that was if you, depending on the location you wanted to move into, you might be downsizing the size of your house, but moving into a more expensive area, you were not allowed to bring your tax base. So that part changed that, yeah, you can bring your tax base if you're 55 or over into another county, and you could buy up as well. We just add on the additional value from what you sold your prior house. We take that difference and add it onto your existing property tax base, your Prop 13, and you can bring that to your new house with you. So that's great. But the other side of it was you could no longer basically give your house to your kids or leave it to your kids. In the past, you could do that, and up to other residential properties as well, up to $1 million of other property, you could basically give or transfer to your kids, either pre or post, death, um, um, and and it would not get reassessed at all. And honestly, from an assessor standpoint, that was a whole lot easier because you just filled out the form. We just rolled over the existing assessed value. We didn't have to do anything else. However, Prop 19 changed that. Now, You can't give any other property other than your primary residence to your kids. So
Well,
you're
and again, to be clear, you can give it to your kids. They're going to have a reassessment done on it.
correct. You cannot give your tax base to your kids anymore. Yeah,
There
you
we
can
go.
still transfer the property. Yeah, thank you. You can still transfer the property, but that it'll get reassessed. The only one that now could still qualify for not getting reassessed is the primary residence of the parents. But one of the kids, one of the heirs, has to move into the property within 1 year and apply for the Prop 19. Then, even if they qualify for that, it's only about $1 million exemption. Started at a million in 2021. It's going up with the CPI every year. So
Oh, I didn't realize that. How much? Oh,
Oh my
just
uh,
God.
with CPI.
it's like a little over 1,050,000 now. So it
Wow.
goes up a little
Okay.
bit every
Oh,
year, which makes
Wow.
it more of a pain because every year that number is changing. So we have to keep calculating it differently each year when people transfer. So yeah, you get a little over $1 million. Um, and you have to live there. If you ever move out of that property or you rent it, we have to go back and put it back to the assessed value that it would have already been assessed at if you didn't get the exemption. So
wow.
it's something else we have to track that we never had to track in the past.
Oh, wow.
Yeah.
I
So
didn't realize that either.
yeah, it's messy. We kept waiting. A lot of the assessor's offices kept waiting for the law to be revised or anything, but there's been no real revisions. So we've all been powering forward on figuring out the best way to execute these because now every one of those properties requires an appraisal done by our staff to figure out what is the value of that property to then do the $1 million calculation off of it. So case in point, if your parents had a $500,000 tax base and then now you inherit the property and it's worth say 1.5 million, you're fine. You'll get the $500,000 tax base, right? Because the 500 plus a million becomes 1.5. However, if that property is worth $2 million, we're going to have to take $500,000, the difference between the 1.5 and the 2 million, and add it to the parent's $500,000 tax base. So now you're going to have a $2 million house with a $1 million assessment on it. You're still getting the break, but it's not like it used to be where you just inherited that 500,000 and you were done. So you're starting to see more and more articles on here that people are getting surprised by their tax bills and all that when their parents pass away, and that's why they're getting reassessed, and if somebody doesn't move in that property within 1 year, it gets reassessed and it sticks. Um,
Wow.
Big
Wow.
change, real big
Does
change.
it work for grandchildren at all, or is it just parent to child now?
It's still grandchildren as well, but that's a rare one, right? Because in order for it to go grandparent to grandchild, the parents have to be deceased.
Oh,
Um,
well,
yeah,
that's not great. I mean, your
yeah,
kid is
those,
looking at you like, you're standing in between me and that low tax base.
yeah, yeah, those are always been few and far between. So I don't really talk about them much because they were rare to begin with, and they're still rare because both parents have to be deceased, and even more than that, yeah, they basically both have to be deceased because even then, if one got remarried and then there's another one, uh, and then they died, unless that other one got remarried, they could still take it. So it still blocks the grandkids.
Oh, wow.
Yeah, it's really hard to do that one.
Wow. Kevin, were you going to say something? You looked like you were about to.
I had so many questions that went by. Now that I can't that after that last one about the grandparents, I did not know that it didn't just go. You couldn't just give your tax base to your grandkids.
Well,
No.
you can't. You have to be dead. Your kids have to
Yeah,
be
yeah.
dead first.
I can bump somebody off.
So,
Yeah, no. Oh, I know what the question was. Is so I know what happened was a lot of people is their parents would die, and then they would rent out the property
Yeah.
because they've inherited this really low tax rate, and the numbers made sense to rent it. And it kind of kept rents down because most typical that are not professional landlords, they just need to make sure they're covering their expenses and get a little bit of cost for upkeep. And that's what you saw when you'd see look at markets, you would always see the ones that were the one-offs. They're always the ones charging a little bit. Like I have a client right now, literally selling the house to his tenant, and I pointed out the fact that you made it difficult because you were charging so little for their rental payments that there's a bit of a shock when they go to buy this place that they wouldn't have had if they were paying market rent. Um, but but because he was happy with it, the numbers worked for him. He was like, hey, I only have this much expense on, I don't need to overcharge them, and I can, help somebody out, charge them lower rent. I'm kind of thinking that there's going to be a lot fewer lower rents out there, and that'd be one of the reasons why we're seeing such high rents. I've noticed in San Francisco, where numbers were close around $7,000 last year. Now they're closer to $8,000 for rent for a 3-bedroom, 2-bath, and that's just like, that's just crazy.
Well,
Um,
I think that has less to do with the tax assessment and more to do with demand. I was having this
oh
conversation
yeah,
with a property manager in San Francisco yesterday about just this. And yeah, demand there is
well
heated
yeah,
up big time.
availability is unbelievable. I pulled up the numbers, and it was last year there's probably 40 to 50 homes in the market I was looking for, and this year maybe under 20 homes available. So that's what's also driving it up. But it's a lot of
Uh,
the city. So
Lilia put a comment and she said she sold her mom's house. The property was reassessed from the date of her death to the date of her sale. 10 months later, additional property tax for 10 months was over $6,000. Yeah. And from what I'm
Yeah.
hearing, Vince, you guys don't love this. This is not
No, there's a lot more work for us too. I mean, like I said, they all waited for this to go away. I can tell you, Prop 19 had big backers. The National Association of Realtors put
Yep.
in millions, tens of millions, and so did the firefighters, which took us a while to figure out why they poured into
I
it too.
still haven't figured that out. Did you figure
I
it
know
out?
why.
You know
My
why?
son.
They're heavily based on the reassessment value.
Yep.
That's where they get
Oh,
their money.
how much money they get?
Uh-huh.
Yeah, they're under that 1%, where it starts going up to one and a quarter, 1.3, 1.4, 1.5 plus when you're in Richmond area. The firefighters, they get they all of their voter approved stuff is on based on the assessed value.
Yep. I know why. This one's my son was a firefighter for a while, and he was right after it passed, and immediately all the fire stations were getting new fire trucks. They were getting all the new
Mm.
firehouses were getting remodeled, and they had more
Good
money
grief.
than they know what to do with.
Holy guacamole. Okay, so Vince, Robb.
Yep.
That is the name of our guest. Somebody asked what your name was, and your
Oh,
name is Vince Robb. It's in the corner of his picture, just in case you missed it, folks. Um, the okay, walk us through how we would, as a child, if we're going to live in our parents' house and keep it, and we want to avoid reassessment, how do we do that?
so you have two ways.
And by
After,
the way, let me just preface this by saying that Vince is not giving legal advice because he's not an attorney. So if you would like to verify this information with an attorney, we would strongly advise that because none of us, in fact, are attorneys. Kevin, you're not an attorney either, right? Me neither.
Now.
Okay. So Vince is not giving legal advice. He is just telling us what he thinks he knows, and we're going to verify it with a legal professional later. Go ahead, Vince.
yes, thank you for the disclaimer.
Welcome.
Yeah, so the easiest ways to try to mitigate it, or I don't want to say prevent it, mitigate the taxes going up is to try to do things before the parents pass away. If you can get on title in some way and then file a Prop 19, that way the parents are still living in the property. Just one person, the parents or the kids, have to live in the property. So if you get on title before they pass away, uh, there's a way there that you could possibly avoid a reassessment upon their passing. There's also some avenues through the joint tenancy ways. I will advise you to talk to an attorney on that because those can be very tricky. But joint tenancy is a way you can um, help mitigate the taxes potentially going up at some point if you transfer the property. So the more, as with a lot of estate stuff, the more you can take care of before they pass away, a lot of times it can be better than waiting till after to do it.
So
If it happens to be after, again, you have to, one of the heirs has to move in the property and put a homeowner's exemption. That's a big thing. You have to put the homeowner's exemption on within 1 year. So,
okay, so adding someone or taking someone off title is not going to trigger a reassessment.
not always. No, depending on how you're holding title, under that's the whole joint tenancy thing there. You get the original joint tenants and then the other joint tenants. There's ways to take people on and off title there without triggering reassessment.
Wow.
Um, there's also ways, through in and out of LLCs that you can kind of do it as long as it's same proportional interest. And then obviously, husband to wife is an excluded thing there as well. Um, so yeah, there's yeah, I see that isn't property reassessed if title's changed. It depends on it's more not necessarily the title as much as who owns it, who's
Yeah.
got the ownership. That's what we look at as ownership.
And I would really be careful with adding kids to title randomly because I recently have heard a couple of stories about kids being on title and then not letting their parents do what they need to do with their property.
Mhm.
They won't let them because they want to inherit it or they want to whatever. So you got to be super careful with that because you
Yes.
get the wrong kid on title and your parent and the parent is just toast.
I ran into a client where the parents left the house to the kids. There's three of them. And then after the death, one of them said, I don't want the house. I just want the money.
Mm.
And that caused a lot of problems for them because that would be a reassessment because now they're transferring the title from the two brothers to the third, and then that would have reassessed it. So they end up having to get an attorney, and what they end up doing in that particular case is they had the one and one of the cash to just decline inheriting the property, and then they paid on the side the cash. Uh, but that was
Yeah, there's ways there. Like I said, talk to an attorney. There's ways there if it's still in the estate to do an equal distribution that doesn't include the property. If there's enough assets to do that, there are ways to make that
exactly.
happen.
But yeah, it's just something that if you're thinking about leaving a house to all your kids, you might want to talk to them and see if they want the house because they
Yeah,
one of them might not want it.
100%. And Audrey, to your point too, yeah, be careful putting your kids on there. We do sometimes get it where you remember, especially in California, which is a community property state, if your kid is married and you put your kid on title, the spouse could obtain some ownership of your property there, and if that goes sideways, that could cause some
Yeah.
problems.
Holy guacamole. Thanks for that reminder. Jeez Louise.
I
Um,
always find that the in-laws cause the most problem. It,
well, that's your experience, but I'm hearing kid problems like regularly, which is freaking me out. I didn't know that their spouses could get in the mix. Holy moly, that's nuts.
Community property.
Wow, wow, wow. Okay, yeah, that's okay. So if your child is married, don't add him to title. Okay, so somebody's asking what is the best way to reach out to you or somebody in your office or other assessor's office. I mean, you've been extremely generous with us. There was just no question you were really willing to show up. So, um,
I could answer that. I will tell you most assessors up and down the state, because in California they're elected, right? They're not all states have elected assessors. There, we covered that. They're elected in California, so especially like right around now is election season. A lot of them will be happy, more than happy to come out and talk to your realtor groups. Especially realtor groups because realtors kind of are like the front lines for us. We are behind the market, right? We get the deeds a couple of weeks or after they close, and then we reassess them a couple months after that. But we look at what the realtors are posting online, what the condition of the property is, what they're saying about the property. We pay attention to all that because ultimately we are trying to appraise apples to apples the best that we can. And so we're very reliant on what the realtors are saying about the property because you guys are in the properties way more than we are. So please reach out. I mean, I'm in Contra Costa, but I know, especially the other Bay Area assessors, but up and down the state, a lot of times they're happy to come out and be a guest speaker or send somebody. I'm the number two. I go out often. My boss goes out as well. But they're happy to come out and talk, especially to realtor groups and other groups. I'm going to Rotary clubs. I go to Chamber of Commerce. I go to all of them, kind of answer all these same questions because property taxes is confusing, and most people don't know that we are not the tax collector. So, the other thing is, I see on there to reach out to the assessor's office. Don't be afraid to call the assessor's office. We're all there to try to help educate. The more educated the public is, the easier it makes our job. Right? You call once, you now understand the process. You may not call us again, and that's good for us, right?
right.
I see one question up there I saw. I want to touch on that. How about adding to a family trust, adding people to a trust? Um, that goes back to the title thing. We don't care the name of the trust or whatever. We care about the beneficial ownership of the trust. So usually when things go into trust, we end up having to get a copy of the trust to see who owns what. Ultimately, we care about who is the owner, even in large corporations, who actually owns this thing. That's what we pay attention to, and that's what deems whether there's a reassessment there or not. Is it comes down to the actual ownership, not the title.
Interesting.
Yeah,
And
that's important. We have another comment here that somebody said, I now increase my rents every year because the real estate agent said they could pass a statewide rent control measure and my rents would be frozen at the current amount. Otherwise, it was not increasing the rents every month. I mean, that is yet
That's another
another
room
reason
here.
to not
Yeah.
have rent control is that tenants are having increased rents when they wouldn't normally because landlords are afraid of getting behind. So it's tricky, and it definitely, guys, varies from city to city, county to county. And so make sure that when your clients are buying, that you're checking to see what those rent control laws are in that city and in that county to see if they're different from the state rent control that we do actually have here. Which, anyway, yeah, Kevin, were you going to say something?
I did have one quick question, reassessment times table. So when a house is sold and the home is reassessed and the property taxes are reassessed, what is a reasonable period of time for the county to get that reassessment done for the new buyers?
Uh, it varies, but I usually tell people it's usually about 6 to 12 months. By the time we review the sale, by the time it gets to our office from the clerk recorder's office, right? Because it gets recorded to the clerk recorder. In some counties in California, the assessor is also the clerk recorder, not in mine. We're separate. So we get that by the time we review it, we process it all. There's legal timeframes in there that we have to send notices to the taxpayer to allow them to qualify for exemptions and things like that, like a homeowner's exemption, a disabled veterans exemption. There's stuff like that they can qualify for. We then transmit it. Once we've worked it, transmit it about 45 days later to the auditor's office. They tend to do them like once a month in our county. And then it goes to the tax collector, and then the bill finally comes out, which then it's usually a two installment supplemental bill, right? And you get usually 3 months and 6 months to pay the first and second installment. So you're looking at 6 to 12 months typically on the supplemental bill. And I'm glad you went there because my biggest thing here is banks do not pay the supplemental bills. Although somebody told me the other day Wells Fargo might be starting to do so, but um, banks don't pay those. So make sure the clients know that the homeowner is responsible for paying that supplemental bill. The banks and your impounds will pay your annual bill, the secured bill they'll pay. But the supplemental bill that you will get one time, the homeowner has to pay that. I don't know how we get calls daily saying, I thought the bank was going to pay this and now it's delinquent. And the tax collector does not waive penalties. So pay your supplemental bills, or if you get a bill, contact your bank and ask them if they're paying that or not. Otherwise, pay it because those penalties and fees do not get waived.
They don't receive those bills even. So what I tell my clients
They
is
don't.
they have to they have to call. And sometimes the impound account, depending on how much money is in there, because in theory they are collecting enough to have the money in there to pay the supplementals. But to your point, you have to call and ask them if they're willing to do it. Some of them will if you send them the bill if there's enough money in there, but they may have to pay it on their own and then get a refund the next time they have their annual assessment of the impound account. So yeah, yeah, when you're pushing a button, you're probably not being told that by your loan officer when you think that's how you can get a loan. Not that I have an opinion about that or anything.
And one thing that's on that impound account too. Sometimes the banks adjust depending on timing. However, they tend to do it in January, February usually. But if things haven't fully gone into place yet in your assessor's office, some assessor's office because of staffing get a year or two behind. If your bank ever issues you a refund out of your impound account, be very skeptical. You may want to hold on to that because you may have to then a year later put it back in. We get
Yes.
those calls often
Yep.
sometimes, and make sure if you're getting money back from the bank, you're probably going to want to hold that money because they're going to be coming back at some point and asking you for more.
100%. I always tell them you're getting a refund, stick it in a savings account, forget it exists for the next year
Yeah.
because they very well could ask for it back. So, wow. Okay, Vince, that was a quick hour. Let me just tell you.
I told you this was
So
fast.
good job. Good job.
Yeah, welcome. Thank you.
Oh, I just want to just remind everyone why we do what we do, and that is because people need a home. And it's been a few weeks. I promised you I was going to keep reminding you of this. Two-thirds of all wealth in the US comes from home equity. Two-thirds. So people should be buying homes if they possibly can. We've had a positive return in real estate, 78 out of the last 83 years. That's unbelievable. So just as we're going through all this craziness, it's always crazy. There's always some version of crazy, is what I've realized. We just need to keep our eye on the ball, which is help people find a home. And then know that, at least in Contra Costa County, if you reach out to the assessor's office, they're super helpful. So, Vince, we are really appreciative. I really hope that people look at the qualifications of these candidates when they're voting and forget about what party they are, because tax assessment is not a party issue. It's a do you know what you're doing issue. And it's nice to know that there's an appraiser in charge of our tax assessment here. So, property tax assessment. So, with that, anything else, guys?
No, that's good. Thank you much.
No,
All
thank
right. Well,
you.
have
Thank you
a
for having
wonderful
me.
week, everyone. Go get a loan, close it. They're out there. People are looking to buy houses, and we'll see you next week. Thanks, guys. Thank you, Vince.
Thank you.